This is a video for the people on Black Friday that want to make money. While everyone is out there shopping, they're going to malls, they're going to Walmart, going to Target, ordering off Amazon, anywhere where they can find a deal. There are other people at home sitting on cash, looking at the markets thinking, what stock looks good? With all these juicy stocks that are down in the last year, 2 years, which one of these look best? Which one of these look like the best deal? They're just looking so juicy that it's hard to just not buy them. There's just so many, and there's so many good deals right now. This is a crazy Black Friday sale in the stock market. It's going on about every day in the past year now. So let's take a look at the 5 stocks that I like the most. And this is not going to be like 5, 4, 3, 2, 1. These are all like equal good stocks. Like, it doesn't matter. You can buy these at any time. First one we have pulled up right now is Roku. Roku is a beast. Roku, it is a beast. You can't even walk in a house. Every single house that I see, it has a Roku TV. Like, there is not a house that I have been into in the last 3 years that does not have at least one Roku TV or Roku system remote in it. It's actually crazy. When we look at the market cap of Roku, $7.87 billion. And just Roku right now at $56. This shit used to be at $450. This is a big drop. And it goes to show part of this is because of the advertisement segment's been going down. In a recession, they don't call it a recession, but we are in a recession. So all of the earnings from advertising spenders like Roku, it's a advertising based business model. That's just going to make all of their revenues hit, make all of them go down, but they won't go down forever. They're only going down as long as the economy does. So as soon as the economy switches back, we get some lower interest rates, the advertising spend is going to go back up, and it would be hard for Roku to just continue to go down. Bottom-ish area for Roku, but I don't want to call it. Next we have Disney. Disney, this is a really interesting stock. A lot of people love Disney and hate it. You see right here, we used to be above here around 200. And this was even after COVID. This was the COVID dip right here, which all the parks got closed, all the Disney parks got closed, everything got shut down. But then the upside of that is you have Disney Plus, I think it's called. That is going to account for some of this right here, some of that upward movement. So now with the streaming service, again, the economy being hit, the streaming service is going to pull it down. But with this going down, the parks are actually making money. Here, the parks were making no money. Everything was closed. On the way down here, it's a little bit different because the parks are making money now because things are open back. And so now we're looking at it a little bit different. Is this the bottom down here around these 100 levels? I bought a share of Disney right after their last earnings. Thought that was a great buying opportunity. I'm going to continue to add to Disney. Another thing about Disney too, they just got Bob Iger back. Their CEO that left and came back did some Steve Jobs shit. If you have not checked out that video, it's like right here. Disney stock and the Steve Jobs effect is the video. Next up, Meta stock. So Meta is a lot of different things. Meta. And if you want to buy any stocks, I recommend using this Webull code. Use this Webull code and get your money. Get your money. Use this Webull code right here, and it'll be a link in the description below. If you use this code, 15 free stocks was Facebook. They changed their name to Meta. Now Meta is Instagram, Facebook, WhatsApp. Those are the biggest ones, but those are 3 of the top used apps in the world, like the most used apps in the world. So a lot of this movement right here is because of the metaverse shit and the economy part of it, advertising spend. They're right in the same boat. But some of this is with the metaverse. Zuckerberg on this metaverse adventure, that really does a lot. Like, this is what happens when you see the vision and no one else does. Like, this is what it looks like, especially to institutions. Think about if you're someone who put like $10 billion in Meta before they changed their name to Meta. Like, before they changed their name to Meta, you have no clue what's going on. And then you have $5 billion, $10 billion in the stock, and they change their name. They say, we are going to change our whole business model, and we're going to focus on this for the next 10-year growth. It's going to shake a lot of people up. They're going to be feeling a type of way. They're going to be like, yo, Zuckerberg, you did me dirty. But people just don't understand. Like, it's going to be hard for people to understand what Zuckerberg is trying to do when he's that guy. Like, Zuckerberg is that guy, and people may not believe him, but he has proved himself time and time again, and I think that he'll do it again. This should easily go back to $300. Meta is a $1 trillion company, easily. Next up, this is sort of a health play. I got Teladoc. If you don't know what Teladoc is, they're more of like a online health service. So let's say if you're sick and let's say you're so sick you're not able to go to the doctor, or if there's some kind of super crazy pandemic and no doctor's offices are open, what do? Well, some insurances you can get teledoc. It's like a health app. So you have a doctor on your app. You're on this app and you just make your appointment. It's like a Zoom call with your doctor. They fill your prescription, they give you whatever you need, and you go pick it up. It's a really neat business model, and you can see where's the COVID dip. So here there wasn't even a COVID dip because of the business model. Because of COVID, it just made it moon, like straight up. It made it go way high, appeared to almost 300 level, and now we see a retracement, complete retracement, 300 down to 30. You know, that's a 90% move. So at that, just for that reason, you know, you would like to somewhat be in this, even if it's just small shares. I really like this. It's a really interesting one. I love this business model. I think that this business model is going to continue to succeed, and that if there's any other pandemics or anything, this is going to go straight back up. But even without that, just this business model alone is solid. So the last stock I have on here, and this is one that goes into the crypto industry. This is Coinbase. Coinbase has got it pretty bad. Coinbase, since inception of going public, has had it pretty bad, but they valued this shit so high. Up here, it was probably valued at probably $70 billion. So we come down from there, see where we're at. Right now, we're sitting at $10 billion in market cap. So now we're sitting in $10 billion in market cap at these levels down here. And you can see it's pretty tradable. Like, a lot of people trade coin. A lot of people watch Coinbase for any movements related to Bitcoin. That's why it's a risky one. Like, this one is risky, but it's like, at least this is a exchange that is publicly traded. That's why I like this. That's why other people would recommend Coin2 over other crypto exchanges, because you can see their financials. That I'm not saying that is like the golden rule or like the golden ratio of what you need to invest into a crypto company that's public, but it's very good. A lot of people like and trust Brian Armstrong, their CEO, and this, like, by far, this is the safest crypto investment in the stock market right now. So if you don't follow me on Twitter, you can check me out here. You know, just hit that follow button, see what's up. I'm always saying something. Like, it might be something cool, it might be something wild, but just know that I'm always going to say something. So if you want to get 15 free fractional shares, you know where to go. I might have it in the pinned comment below, but you can buy whatever. You can buy any of these stocks that you want. You just do whatever is best for you and your financial needs and situation. Make sure you like and subscribe. I'm trying to get more subscribers. I'm really on that grind. I've been posting videos almost every single day now for the last 2 weeks. It's been crazy, but this is just how you have to do it if you want to grow. And I love all the support I've been receiving, and you know, it just means the world to me, more than you all will ever know. And if you have not seen my latest video, I will drop that somewhere up here above. You know, click on that if you want to show support. And other than that, have an amazing day and Black Friday, and peace.